All right, welcome to everybody to the client support webinar that we do each and every week on Wednesday. Today is May 3rd. My name is Bennett McDowell with traderscoach.com. All right, so if you have any questions, feel free to open up the questions panel inside the webinar console or whatever you want to call it, the admin panel, and make sure you type those questions in and I will get to them during the presentation. Presentation will be about half an hour today. And really, this is a webinar for you, okay? So I'm really gonna answer your questions if you have any. I have a couple on the RRC, which is our risk reward calculator, that I wanted to cover to make sure everybody kind of understands that. And let's see what else we got cooking. And basically just anything you want to ask about courses that you may have taken from us, anything in our books that you have questions on. Of course, software, that's the other purpose of this is we have a lot of software users out there, and we thought this would be a good type of presentation to do weekly to field any questions that people may have on that. And so we welcome you, okay? All right, I have to go through some administrational items first before we get to the content. So let me go ahead and go through that. First thing I have to go over are the risks involved in trading. There are risks in trading and even investing in the financial markets. So you need to be aware of that. It's possible to lose some or all your money. Past performance does not guarantee future performance. You want to trade with an edge. And this is really important. In order to know if you have an edge, you kind of have to test it, right? And not necessarily back testing. You need to be testing the market as it unfolds based on your own belief system and how you like to trade, and then tweak it from there and see how your edge does. And the edge encompasses not only entries and exits, but risk control and many of the aspects that you need in order to do well in this business. So definitely before laying down real money in the markets, make sure you have an edge. And when we have our software in use, no two people really traded exactly the same. Like I'm a big believer in trying to get into trends early. So I usually get in as early as I can, and I use a variety of tools to do that. I use all my indicators, I use the pyramids and things of that nature. All right, so we all trade a little bit differently. Some people like to scalp the markets using our PTF indicator. So it just depends on the kind of trader you are and what kind of trading you like to do. All right, and so that's important. And then you also want to be able to trade with money you can afford to risk, called risk capital. Risk capital is super important because you don't want to feel the stress of having money in the markets you can't afford to have in there, and that causes a whole bunch of problems. Finally, too, make sure you check with your financial advisor or money manager before implementing anything that we talk about, especially if we look at stocks, any stock ideas and so forth, because we don't know your personal situation. They do. A lot of factors come into determining that, things like your age, your short-term, long-term financial goals, and things of that nature. And of course, your risk tolerance. Now, where we can help you and where we're experts at is risk control. And I've written a variety of books that deal with risk control. My newest book is the second from the right, called Money Management for Traders. That's that green colored outline book. And this book is really inexpensive. Maybe what, 3 cups of coffee, maybe 2 in today's inflation. Seriously, it's about 15 bucks, all right? Get the book if you're not implementing risk control, because this book is phenomenal, all right? It will tell you everything you need to do to implement a risk control program into your software. So if you have an edge and you want to further develop it with risk control, that's a great book. Now, if you want a more deep dive into risk control, then a trader's money management system is the one for you. That's on the far left. So either one of those will do it, but I suggest the money management for traders. Now, the art of trading, we're coming out with our second edition. Wiley Publishing has asked me to come out with that. So we're working on that now. And that's going to be a great book. A lot of new material since our first book coming out in 2008. We have new software since then. So you're definitely going to want to pre-order that and get the good price now. And the order link is on our website. All right, so when it comes to software tools, we got a lot, okay? And I consider them the best software tools. literally in the market today. I've been trading for over 30 years. If they weren't good, I wouldn't be using them, right? So we have software in the top row, which is our charting software. That's the ART system, the OWL, PTF, TLM, and ERI. We use those in conjunction. We get a signal from the ART system. We confirm them with the other indicators. Then we got to find markets to trade, whether it's forex, whether it's bonds, whether it's stocks, whether it's futures. That's where the scanners come in play, and that's the middle one. And then we have 4 types of scanners as that. And then finally, the risk control software at the bottom is we have the risk to reward calculator. I'm going to go over a little bit to that today, trader's assistant and trade size calculator. So that's it. So I want to come out of here. All right, so if that was a little small for you guys, don't worry. Now we're going to pick it up here. All right, so one of the things that we do is we have, every time we take a trade, we use this device here called the risk to reward calculator.
And I don't think you're sharing your screen.
Oh, it's not shared? Oh man, you're kidding. I mean, I blew 5 minutes without sharing my screen?
No biggie.
For you, maybe. All right, now I got to share the right screen. Well, that kind of sucks. Hold on, I got to get the right screen now. Okay, there you go. Okay, sorry about that. All right. Anyway, that was okay. That's better, right? Oh my God. All right. So this is the risk to reward calculator, and let's just jump in here. I won't repeat what I need to repeat because that was just admin stuff anyway. So here's the risk to reward calculator. Now, is Jim here? We got a lot of people here. Jim, if you're here, Jim Blue, are you here? Okay, good. Jim's got a question. Now, Jim's new at using the calculator, so he wasn't really sure how to use it. So I want to go over that with you. Jim, give me the value of your account size, just whatever the ones you were testing at. Now, we responded to you, Jim. Did you get our response, our email response? That's the first question I want to give you, ask you, rather. And I'm so glad you're here because this is exactly where you want to be in order for us to help you.
Jim attends every single week.
No, I know that. Okay, fine, but that's not the number you used, Jim. And that's why you didn't get the thing. I want to first use the number you gave me because I want to show you something. While he's looking that up, one of the issues he had was that he had a small account size in there, and which is fine. Okay, he was testing it. The account size doesn't matter, but the point matters. All right, so there's an area here, okay, where let's just go. All the instructions are in here. Let me just see. Give me a second. All right, here's what I wanted to focus on here. Okay, red color trade size. Okay, so what Jim had is a small account size. And the problem is his account size was depleted before it reached the 2% risk. So no matter how different, okay, his 2%, his percent size was, if it's red, if the text in the trade size is red, what that means is that you're not utilizing the full 2%, but your trading account is capping the amount you can share. So therefore, it's always going to be the same shares provided you get capped. So let's just take a look at this. I'm going to go find your email from yesterday. So I think that's in the support area. Give me 1 second, because this is a really good question. All right, let me see. Okay, here you are. Okay, ooh, okay, good. All right, let me just see if I can find what happened to, trying to find the actual pieces here. Okay, give me 1 second. I need to find the actual numbers that he used. So that's my problem here. And I don't have them. Okay. So let's go in here. I'm almost there. Okay. All right. So here is the actual numbers that he had sent over yesterday. I don't know if you can read that well. Let me see if I got another picture here that's better. Okay, that's better. All right, that's 20,000, 2%. Okay, so do you see where it's red here? Okay, that means the trade size is being capped because the account size is exceeding what it needs to exceed. So the dollar risk on the trade is 1,497. Now, let's do what 2% is. Let me get all my little calculators up here. Okay, so 20,000, I type it in right. Geez, I did it again. Too much coffee. All right, times 0.02. All right, so 20,000 is $400, okay? 400 bucks. And the reason he's getting a crazy value here is because he doesn't have a margin amount. See, the margin is 0, okay? The point value is 1. Now, the interest price is 0.87, 14.76, so really close, like 20 cents away, all right? So let's put that in here, all right? So you got let's go to the stocks. So you got a $200,000 account or a $20,000 account or $200,000 account, I guess. I'm sorry, it was 200,000. So it's a $4,000 risk. Okay, so let's just do that again. So 200,000 times 0.02. There's your 4,000. All right, so he's got a $200,000 account. All right, in this example, and he's got an entry price of $14.87, and his exit price is $14.76. Now, that stop is really close, right? That stop is really close. So you expect your trade size to be really high, right? All right, now, the next thing is the point value. You're on stock, so you had your point value right. Commission, you didn't put a commission in it, so I won't either. Now, margin. Margin is important because if you have a 100% cash brokerage account, in other words, not a margin account, then you want to put 100 there. If you have a margin account, then you want to put the margin amount. Like if it's a 50%, if they'll loan you 50% of your account to buy excess stocks, they call that a margin account. And so therefore that would be 150. So in your case, I'll leave it 100. And now we hit calculate. All right, now I get the same numbers he's getting, okay? Same exact numbers. Now, here's the deal, all right? Now let's take a look and see what's happening. So we have a trade size of 13449 times 14.87, which is the entry, okay? And that's the cost of the trade, okay? So here's the cost of the trade right down here. All right, how much money does he have? He has this, right? All right, so therefore, all right, when he has a 0 in there, okay, it's not computing. But if you have 100, okay, it's going to tell you the same numbers as a 0 because it's assuming it's a 0% margin account. Now, if you have margin, that's different. All right, so that is the fact is that you can't afford another share of stock because you're at a 0 margin account of 199. So another share of stock would put you over your account size. So that's why it's red, and that's why it capped you. And that's why you're not getting $4,000 of 2% risk, because you can't go over your account size. Okay? That makes sense. So when you see the trade size in red, what's limiting your trade size is the account size, not the risk. Okay? And your stop is really, really close too. So your trade size is going to be huge. But the problem is that, you know, you just don't have it. So if the stop was further away, let's say at $10, okay, now you're using the full amount of the risk because you don't have red anymore. Whoops. See, there's no more red. So now you're using almost $4,000 in risk, which is 2% of 200,000, because your stop is further away. All right, you can't buy as much stock because now your 2% kicks in and keeps you from overbuying. You see how that works? Now, one more share, if it was 822 shares, it would put you over 4,000. And remember, okay, whatever amount of trade, so the cost of this trade was 12,000. All right, so in the next time you make a trade, if this is still an open trade, please remember to reduce the 200 by the 12,208, because you have less money in that brokerage account, so you got to reduce that. Is that clear? I'm not hearing any response, so I'm not sure if that's clear. Yeah. So the closer together your entry price is to your exit price, the more shares you'll be able to buy. The problem is that if you get to a point where you don't have enough money in the account to buy the stated shares to give you a 2% risk, then it's going to stop you, and it's going to show you the maximum amount of shares you can buy based on your account size instead of the risk amount. Because the risk amount you're not exceeding, but the account size you are, and that's where it turns red. That's where the trade size turns red. So play around with that and you'll see, okay? Okie doke. So that's a good question, because if you have it, other people have it. So I appreciate you bringing that up to us. All right, so anything else? Does anybody have any other types of questions out there? Feel free to ask. All right, so Lowell Carty. Is that stock you want me to look up? Could you type those in caps just to make sure, like I got an AON, I think that's AON. And Lowell, are you using our software? All right, let me make sure the volume is still good. Gene, can you still hear me?
Audio's perfect. Yep. But
Okay,
I
I'm
guess
asking
we're getting
people.
crickets. So Lowell
Yeah,
gave
I'm
you
asking
caps.
people questions, and
I know.
they're quiet. I don't get it.
So Lowell does not yet have the software, but he bought the Art of Trading book.
Okay. Which one? The first edition?
Correct.
Okay. All right, so let's take a look at this here. All right, so here is AON. So basically, Lowell, the way I set my screens up is I have multiple time frame analysis. So I have 60 over here, daily here, and weekly here, okay, when I'm looking at stocks. So I like to open up the weekly first, get a good generic view of where we're in. All right, so that's an Elliott wave 3. Okay, so let me ask you a question. Do you think it would be better to enter here or here? One or two? Where do you think it would be entered? Where do you think it would be best to enter? Right, one. All right, so if you're not long on this already, would this be considered a riskier trade up here on this chart? Yes, okay. All right, so when you look at a chart and you're looking at it long term, when you see clarity like this, bracketed market, this is what we call an Elliott wave 3. I don't know if you're into Elliott wave or not, but that's an Elliott wave 3, okay? We did not have enough of a correction here for a 4, so you're still in 3. So could you make another high? Yes, but it's Russian roulette at this time because you're already pretty high. Would have been better to get in at the first point on 1, right? So now let's go to the daily chart here and see if that can help us at all. And not really, okay? It's kind of a messy chart here. So it's kind of tough to figure out where the target would be. And we may have already had a high, and maybe we're getting ready to sell off, or maybe we're going to make one more high. So that's why I'm saying it's Russian roulette. So I'm not getting a very clear view on where this is going for sure. Sure enough, put it that way to make a trade. All right. And we've got some bearishness coming in on the 60-minute. So we got a bearish pyramid here. So I would not take a long trade on this. All right. Would you take a short trade? Maybe, but you'd be going against any bullishness on these long-term time frames. So it's not really ripe for a short term either. So I would stand down on this. Okay. I would not do anything with that. Is that clear? Do you understand why? These are good. This is all good learning. So this is excellent. All right. Basically, Lowell, when you look at a chart, especially when using multiple time frame analysis, if you need to scratch your head for more than a minute to figure out what to do, it's not the right stock. It's not the right market to trade. What you want to do is look at clarity. And when you start using the software and using the kind of structure we use, which is looking at the pyramids, looking at the indicators, looking at the Elliott wave, looking at the fib retracements, if you can't connect enough dots for clarity, then it's time to move on to another market. So I like to trade ones that are clear, that really jump out at you. Okay, definitely. That's the way you want to do it. Okay, BCE, let's take a look at that bad boy. All right, let's open up the weekly. All right, so pretty messy weekly chart. We had this big move up in 1999, and since then it's been pretty darn flat, hasn't it, on the weekly chart? The channel between highs and lows for the most part right now are pretty significant, okay? So, maybe you could catch some swings in here on the dailies or the 60 minutes, but until it really breaks out here, this is not a long-term trade at all, okay? So you're kind of bracketed in there. So now let's take a look at the short-term trade. Okay, so here we got something here like this. All right, this retracement was way too deep for a 4. So not really sure what that is. It's kind of messy. Where PTFs are yellow, so they're neutral. So my problem on this, I'm not sure where the target is, okay? It's not clear enough. 60-minute chart is the clearest chart of them all right? So this is definitely an impulsive wave, and you're probably going to get a pullback at some point to here. Once again, is it better to enter here or here? Here, all right? So now if it moves back down, all right, your first profit target zone could be here. That's a point of inflection or a fib retracement. So if you can get in early and possibly make it here, that's fine, but that's a retracement trade. So, okay, but again, 60 minutes the clearest, the rest of them aren't so good. So no go, okay? No go. All right, so let's take a look at DBA. Hey, Jim, check your spam, okay? Because I sent you an email and also support sent you one too. So if you didn't get it, then chances are it's in your spam or junk mail inbox. We respond right away. So definitely check that out. All right, DBA. Let's take a look at this. Yeah, check your spam, Jim, and let me know right away. Let me check the ticket system here. Okay, so here's our ticket system. And let me open this up. And here's your response. Here's your email here. And here's our response. Hi, Jim. No bugs. So send me a screenshot of what you entered so I can see what you were doing. And then I think you did that. And then responded. Let me just find the response someplace here. See if I got a copy of it. So you should have gotten one from that ticket system. I'm trying to find the other one. I got to figure out where it was sent to. All right, check that. All right, well, I don't have access to the support emails right now. So, all right, so anyway, check that because that one definitely went out on the ticket. All right, so here's DBA. Okay, so DBA, got a couple things here going on with DBA. All right, so you have, let's open up the weekly chart and kind of get a feel for where we are in this. So, all right, so we got history back to 2008. Okay, nice short trade to the downside, possible good bottom here. We've retraced up to the retracement area here. All right, we're probably going to come down to the inflection point and then, all right, so we moved up here. We might not be done retracing because if we draw in a fib retracement here, even if this is an uptrend right now, let's just check to see if the inflection point was reached. Let's do that from here to here. So hit it here once briefly. So maybe it could be going on its way back up. Okay, so that's okay. If you take a trade here on this is a weekly chart, put your stop either at the very bottom under here or below a fib number with a reduced trade size. Let's just see if now is a good time to enter. Okay, so this is getting a pullback. All right, the 60 minutes says the pullback's not done. All right, you see the red PTF? We're still going down. All right, so I would not go long on this yet, but if this bottom holds or we make a new bottom, then you might be pretty good to go. It's only saying that we're going to go down another, that this bottom here sitting at 2040 is not the bottom. So this pyramid probably will hold just fine. But you might want to wait just a little bit until the momentum turns on the short-term time frames before you go, okay? All right. Okay, so Jim, good, you found it. Where was it? Just so you don't miss them again. And that goes for everybody too. If you email us and you don't hear back from us, then the email may be stuck in your spam. And that would be the reply, our reply stuck in your spam. So always check that, make sure you add us to the safe email list. Okay, and there it was. Okay, so it was in your Gmail spam. So that means probably every email that we've replied to you has ended up in your spam. So make sure you add us to your safe list, okay? Good. See, that's why a good thing to come here, right? All right, so on this one here, I probably would not do anything yet on this one. Let's take a look at EW. All right, EW, let's open up that weekly chart. Nice, very clear wave 3, love it, okay? 3, probably here, this top here. All right, so now 4, and 4 could be over. Let's draw in fib retracements. So we got 1, 2, this is lower, so this is a wave 2 to the top of 3. Bingo. So let's connect the dots. Clear, easily definable, bullish impulsive wave 3. Double top. ABC correction, ending in the target zone. Pulling out now with a green owl. So that's pretty good. Let's check the lower time frames. All right, you got green pyramids here, and you're good to go here. All right, so now, that is the best one we've looked at for you today. All right, now, you've had a nice little run up here, so the point of inflection is here. So the pyramids are designed to make profit on each impulsive move. However, you know, what you want to do is not get stopped out on the next correction, because this is going to be a more significant bullish trend. So always use the second pyramid back. Okay, that'll put you under there, or even here, okay, for your stop. It's looking good. All right, you will get a pullback, but you're okay here. So this is a good one. Do you see the difference? Okay, it's a big difference. It's subtle, but it's big. Again, we didn't have to scratch our head to figure this one out that much. The dots just connected. All right, let's take a look at your other one, FLT. And of course, you have to have the right software tools. All right, let's open up the weekly. Okay, so we go back to 2011. All right, this is an impulsive wave of some form here on the way up. Okay, definitely. All right, had a big move down in COVID, like the rest of them, and now you've made your other low. So this is kind of interesting. You know, this is different than what we're seeing in the Dow. You know, the Dow COVID hit a low in 2020, but the market has not gone below the COVID low again yet. I underscore yet. Okay, in this market it did. So that's kind of cool. And so here's the red PTF created by the COVID low. All right, and we took it out. So the PTF was right. Okay, eventually it said it will come back and take it out. It did. But now it's no longer there. So now we got a neutral PTF. That's good for a long or a short trade. You got some bullishness coming in. The only other dot I think I want to connect here is to make sure I'm going to go way back here. So you hit it there easily. And you hit it there, okay, all right? So I think probably in a scenario like this, usually wave 2 is the first pullback after the move off the bottom. So I think that's probably where you are there. So that's pretty clear. 3, 4, going into 5, green, no longer red. And again, do you want to get in here, 1, or wait until it gets up here and get in 2? See what I'm saying? Now on those other stocks we looked at, remember I put 1 here and I put like 2 here. Okay, this is the reason why you don't want to get in late on a bullish trend or even a bearish trend. Okay, because this is what happens. You go into a correction and then you get stopped out because you went in too late. All right, so this is looking good for a long trade. Let's see what the shorter time frame says. All right, neutral PTF. All right, little volatility. So if you go in, you want to make sure your stop's at this pyramid here. Okay, that'll keep you low enough. You got a little bearishness on the 60 minutes. So here's what we're looking at here. And here's where I love multiple time frame analysis. This move back down here is amplified by this move. These are the same moves, okay? And what this is showing you on this time frame is we still got a little bearishness in the momentum, and we still got an active pyramid on the downside. So even though I love this trade for a long trade, especially on the long-term time frames, I would probably wait until that 60-minute turns bullish. We have more momentum, positive momentum, buying momentum coming back into the markets. And then I'll check again the daily chart to make sure that's still green on the owl, which is our histogram here, before I take the long trade. All right, so I like it. This would go on a watch list. I'd watch this every day because the 60-minute time frame can change in a day. Okay. All right, so that kind of thing. All right, Kevin, SAND. See, I love looking at stocks because every time we look at a stock, it's a learning situation. All right, so let's take a look at this one for Kevin. Let me just cruise down these babies so we have a little more price on the weekly chart. And let's open up that weekly chart. So I always like to open up the weekly cut. Gives me a full view of what the heck is going on. All right, so we're back to, this stock is started in 2009. All right, had a big move up, then it retraced all the way, and then it moved back up, and then kind of a lot of volatility in this, even on the weekly. All right, so tough one to trade for sure because of these swings. All right, are back and forth. So I mean, you know, if you bought here in 2016, you really haven't made much money, but you've had a lot of volatility. Okay, so as a trader, if we want to take a look and try to profit off the volatility, you got to make sure you choose the time frame for these type of swings because that's all that it's giving you right now. Now, if it breaks eventually above here, then it could take off, but it hasn't done that yet. So when we look at the lower time frames, you kind of want to keep that in mind. All right, and you can see that it's pretty difficult to trade these swings. So you might want to go down to a 60-minute time frame. That might be a better time frame to choose because the pyramids will get you in earlier here. See? So you could make money using the 60s for the most part, but still not my favorite because you know, I tend to like to use the daily charts more, but it's up to you. Okay, so that's kind of how we do that, Kevin. So it's all about structure. And then once you have the setup the way you want it, then you know, dial in the risk control using the risk to reward calculator, get the correct trade size, and you can put your target price in because you know, you need to know kind of where things are going in order to make a trade because that's for your risk to reward, and see if it's at least 2 to 1 in your favor. And the risk to reward calculator will tell you that. That's what this whole area down here is for. Okay, we focused on here, but if you put the target in here, it'll tell you what the risk to reward is. And if it's over 2 or above, it's a good trade. If it's less than 2, maybe not so much, okay? All right. So, okay, so that takes us through, I went a little bit over, but I wanted to cover this stuff. Usually we're here for about a half an hour. So I really appreciate everybody being here, okay? My pleasure, everybody. Good, great group. Jim, thank you for your questions, and hopefully I clarified that on the risk to reward calculator. Glad you brought your question here, that's excellent. Yeah, those email things are tricky, Jim, you know.
Hey, Ben,
Half my,
maybe show Jim how to access the recording from today's session. I think he might have missed what you were explaining when he was looking for the email.
oh, okay, give me 1 second. I have to load up my customer hub. So Jim and everybody else, all right, in order to actually access our recordings on these, you have to go into our portal. Now our portal is Customer Hub, right? So let me just bring that up. Everybody gets a password, a username, which is usually your email address. And then you get your password, you select that or change it, whatever you want to do. All right. So here is Customer Hub. Now this is an area where you go in and it has any online courses, subscriptions, like the More Report, the Futures Day Trading Rooms in there, software downloads, the forum, all right, and things of that nature. So the situation here is that we put all our recordings on the client support into our YouTube channel. So you have to be a subscriber there for one thing. The next thing is we hide them because we don't want everybody, Joe Public, to be watching our private client support workshops. Okay, this is for us. This is because you may be sharing some private information and we don't want that out there. Okay, so we want that only available for us. And so you have to access that through this area here. So it's on the home page. Okay, it's also on the VIP Client Center, but just go to the home page because that's what you're going to log into. And we have a whole bunch. We have probably close to 1,000 recordings now. All right, the most recent ones we keep on YouTube. All right, but then we have a whole bunch from previous years that we keep someplace else because there's so many of them, and you can click there. But you can focus just on the YouTube ones, okay? And so if you want to watch one that you liked, like today, that'll be posted on YouTube in a couple hours, okay? But you have to access it through here. You cannot access it by just logging into YouTube because it's private. You have to use the special link that we have in here, okay? So you log into your portal and then have access to it there. And when you click on that, here, I'll just do it right now. So when you click on that, okay, it takes you to all the client workshops, and here they are, okay? So here's one from last week, analyzing markets using the software tools. All right, setting scanner timeframes and layouts. See, that was April 19th. April 12th, how the ART, AL, PTF, TLM, and ERI software works. All right, so connecting the dots, kind of what we worked on today. All right, so that's it. All right, here's one on scanner trades using the Elliott wave and the various scanners. Okay, why 90% of the traders fail. Anyway, you get it, right? Charts, RIC, TA option cards, all this stuff is on here. So you just go in there and pick the video you want, but you got to use that special link. Cool? Gene, that was a good idea to show them that.
Yeah, I think if Jim watches the recording, it's going to make a lot of sense on the risk reward calculator and the account size.
Yep. So there's nothing wrong with the risk to reward calculator, Jim. It works perfectly. We've been using it for years. I use it on the futures market as well as stocks. It's just knowing what the settings mean and what it's doing. Okay, so definitely check those out. All right. All right, now we didn't cover anything with TradeStation. I know some of you use TradeStation. You know, here's TradeStation. All our software works on TradeStation beautifully. Scanners are at the top, so it doesn't really matter what platform you use. All the coding is exactly the same. May look a little different. You know, the cosmetics can be a little bit different between platform and platform, but all the software is the same, okay? All right. So that is it for today. Okay, I really appreciate you guys taking the time to making it today. The more trouble we have, the better. Okay, so there you have it.
And maybe we can invite everyone to the YouTube. I'll get the link on that on
Okay.
Fridays.
You're gonna put that in the chat area, right?
Yep.
Okay. All right. Always love the participation. So thank you very much, everybody. All right. So again, while Gene's getting that link, we'll be back next Wednesday and every Wednesday. All right. And if you have any questions, just write them down and bring them back here. Now, also too, you know, we have the 24/7 email support where you can put a ticket in, but sometimes questions are best answered by showing, and you know, versus getting a response on the email. But always try the ticket first if you want. And if you don't get clarity on that, just come here and we'll make it clear for you. All right, let's see. All right, so Gene just put that up. So go ahead and click on that link and subscribe to our channel. It's free, okay? So subscribe to it. If you do not have a YouTube channel, I think you may have to create one or something. You just put your name and email address in, it's free, and just do it. I don't know what the requirements are, but it's simple. All right, so that's it for today. We'll see you back here next week. Have a great week, everybody, and thank you so much for coming. And Jim, are you okay now? I think you are, right? Want to make sure you're doing okay over there. Okay, good. All right, well, you email us if you have any trouble, okay? And we'll take good care of you. Like I always say, our clients are the best.
So true. So true.
They are. All right, everybody. Thanks so much, and we'll see you back here next week. You guys take care. Bye-bye.